Hello, hello. All right, yeah. So today we will be going over. Actually, let me just double check the audio on this is good because I need to ensure that. Yeah, you know. All right, good. Okay, so yeah, the first stock today is Morinaga. So I'm gonna do a quick review of Morinaga. So the company earns around 8 to 10% margins over the last 10 years or so. It's grew. This is not CAGR. CAGR is not right, but it's grown revenues by 32%. They have 24.5 billion in cash, 10 billion in investments, and 21 billion in debt. So they do have a net cash balance of 3.5 billion if we include investments, 13, and let me double check this shares outstanding figure real quick, just in case. That looked a little off to me. Oh no, it's correct. It is correct. Okay. Because I reviewed another stock that had a similar amount of shares outstanding, just wanted to be clear. Yeah, so 222 billion in market cap. Yeah, 119 in enterprise value. If you factor in investments, that's 209 billion. So they trade around 10 times EV/EBIT. Book value wise, 136 million. PE is 12 times. And if we look at the historical track record in the last 3 years, including the forecast, yeah, it looks like they're just being a consistent performer, able to generate increased revenues over time. Yeah, ignore the background noise. It is summer, so I have the windows open. I can close them up in a bit. But yeah, that's the company, and the reason why this company looks interesting to me is that they've been consistent performer. Looks like they have some type of good business economics to go with the company. So we're just gonna dive into the company and have an understanding of the company. And yeah, Morinaga, essentially what they do is they do, from what I can tell, is that they do snacks and ice cream and some soft drinks. So if we look at here, let's look at their product lineup. So they have Haichu, that's what I know them for. So Haichu is like a soft candy that like melts in your mouth. They have biscuits, they have chocolate, they have some fermented rice, cocoa, so some drinks, ramune. They have ice cream. This is very popular for this brand, Choco Monaca Jumbo. It's a pretty cheap, inexpensive, how do you call it? Ice cream sandwich, right? Icebox is interesting. So it's basically literally just ice in a cup. Then you can pour juice and other beverages inside. So you just make your own smoothie. So that's kind of interesting. And yeah, they have ice cream and then in jelly. So I've seen this before. So it's like a energy jelly drink that you just like, it's good for if you're on the go. Because it's kind of like, not only is it hydrating, but it's also satiating, and because it's jelly. I don't know how healthy it is, but this says there's vitamins and there's protein, and then there's also caffeine for sure. Yeah, protein bars, and then a collagen drink that looks like something new, but nothing in the recent history. Everything is like either they built up the brand or product from many years ago, or yeah. So it looks like yeah, they have. I would say that some of these products I've definitely seen in 7-Eleven or at the convenience, like convenience stores in Japan. So I believe they, given the longevity of the brand, it has some type of consumer brand power. So I believe that's probably why it has those margins. And there could be an argument for this company that they could continue to raise prices gradually over time. And that's what you see in Japan. One interesting thing in Japan in terms of business economics is that people in Japan are very price sensitive. So if a carton of milk goes up by 10 yen, Or if a company that makes milk bread, for example, increases their bread by 10 yen or 20 yen or something, they will issue a public apology, apologizing to its consumers, saying like, oh, sorry, you know, given inflation, given the cost of operations, we have no choice but to increase our prices. So in Japan, increasing prices is like they have to issue a public apology. But in the West, if Coca-Cola, if Lay's, if uh, any brand were to increase prices, they would just increase prices. They don't need to communicate that. You just realize that as a consumer, right? So like McDonald's increasing the price of their junior chicken, Coca-Cola increasing the price of their Coca-Cola, like the stuff is just like, oh, you just realize it when you buy it that, oh, they've increased the price. And I would say that people in the West are less price sensitive. A lot of people live paycheck to paycheck and they're not really like that micromanaging. So like if milk goes up by 10 cents, they don't really notice. So yeah. How do I want to start here? So let's take a look at their so there's a three-quarter investor presentation. I'll start with the last fiscal year, March 31st investor presentation, and start from there. A quick look to see if anyone's here. Oh, there are some people in here, so if you join me, feel free to ask questions or say hi. Okay, so let's take a look. Morinaga will continue to create healthy foods that can be enjoyed beyond generations, thereby bringing smiles to the faces of people. I don't know about healthy. I would say that their products are filled with sugar. I would say it probably gives you a smile on your faces like Coca-Cola around the world and in the future. So this is very similar to, Coca-Cola, which sells happiness. Ambidextrous management. Exploration of new businesses, domestic and overseas. Deepening of existing businesses, domestic and overseas. One thing I would be interesting for this company that I should probably make a note on is a question that I may have is what is their overseas revenue growth? And I say this because I know about their Haichu brand, and their Haichu brand I've had since I was a kid. So I know about this business. So it'll be interesting to see because with the ongoing popularity of Japanese culture through anime, it's a natural progression that exports from Japan like candy would be attractive. Yeah, cool. Okay, let's see here. So 7% increase in revenues led to a 4% increase in gross profit and a 5% increase in operating income. So that tells me that there was some COGS increase, so the inputs increase in pricing. Could be due to increase in price of sugar, dairy, yada yada yada, flour. Profits attributed to owners of parents, 7%. Potentially, maybe some tax savings there. Factors in change of consolidated operating income. So let's see. Raw materials. So soaring raw material costs, cocoa related. Oh, okay, chocolate. They do have quite a few chocolate related products. Fats, oils, plastics, raw materials, cocoa fats and oils, ice cream coating, plastics, raw paper, manufacturer labor costs. Probably also for the packaging. Energy costs, exchange rate. Okay, so factor exposure. Cacao. Logistics costs didn't really change much. Other product price increases. Confectionery and foodstuffs, hot cake mix, amazake. Confectionery and foodstuffs, sugar, confectionery, and chocolate. So ability to raise prices, raise economy, disposable income, wage increases, and yeah, something like that. Confectionery and foodstuff business. Biscuits, some products, snacks, some products, protein powder. Oh, in jelly. And jelly increase a little bit. Crackers in US business. Forest net sales. Selling expenses, storing raw material cost, shipping cost. I'm surprised that China-Taiwan exports is so low. US business is 20 billion yen, so 200. Oh, that's actually not bad. No, that's not low at all. 20 billion yen, 200 mil, 90 mil. Yeah, I feel like China should be higher, but then China market is competitive because I can imagine a lot of people, a lot of copycat brands potentially. Might be hard to compete on price as well, if I were to guess. Yeah, 5% margin here, but this has a 15% margin in the US. So yeah, probably lots of price competition in China. That's my guess. And in Japan, 16, slightly below 10%. So yeah, business economics in the US is way better, closer to 15%. Oh, and the margin's over here. Sorry, why did I calculate in my head if it's over here? Yeah, 15%, roughly 15%, 5%, and it's 8.7%. Oh, their in jelly has 23% margins. Interesting. 31 billion. Very interesting. I actually think their in jelly business would be popular over here because think of it as a meal substitute or a snack substitute, compared to like eating like drinking a Red Bull or a Monster Energy drink. So I think this is a better alternative. Frozen desserts, confectionery, and foodstuffs. Frozen desserts having 8.6% is good because they do a lot of ice cream. Confectionery and foodstuffs. Direct marketing operating. Food merchandise. Food related merchandise. Interesting. Real estate. So that's an unrelated thing. Key topics in confectionery. So this is the one with 4.6% margins. So, oh, Haichu Morinaga Ramune has gone up by 14%. 50th anniversary. Ramune is definitely targeted towards students. So the thing about Ramune is like it's a interesting kind of soft drink where you have like this little glass ball, and then you put a top over it and you smash it and it fizzes up, and it's kind of like a, I don't know, kind of like a celebration or a special thing that kids do when they're kids, in Japan. Biscuit. Biscuits has the market. Sorry, the market has gone up 4% here, but their products have gone up 2.57%. The revenue is doing well. Biscuits, the market's gone up 7%, so their biscuits are kind of underperforming the market. Ours is like a chocolate biscuit. Okay, so their chocolate biscuits are outperforming the market, actually. Interesting. After falling price revision. So I said Carry did chocolate sales remain strong, especially for core products due to growing demand for high cocoa content. Yeah, so I think people becoming are more health conscious. So if you're more health conscious, you would prefer chocolates with higher cocoa content because it is healthier for you. But it becomes more bitter though. So yeah, it depends on the change of taste and how health conscious you are. Frozen desserts. This had an 8 point something percent, right? 8.7% operating margin, so it's pretty good. Outperform the market in sales. That's good. Their staple actually underperformed the market and quite drastically actually. But their vanilla one has been more in line, which is weird. So a high hurdle was set in the previous year by both the promotion, media exposure, and revamping the quality of the product. In spring 2023, sales increased in March due to further quality enhancements and promotion. Steady year-on-year growth throughout the year thanks to media exposure during the summer months. Another thing to mention about these products is that because these are sold likely to convenience stores, then you kind of are a price taker in a way because they know they have a lot of data to know like what products are popular, and so if you want to and you want to sell to convenience stores because they're such a high volume buyer, but you do give them bulk discounts, right? So margins can't it's very hard for margins in these cases to be astronomical. But I guess the 25%, 23% in jelly business is kind of an outlier in that regard. That's quite impressive. But they probably do face a lot of competition from other ice cream manufacturers. Okay, using the product as a mixer in autumn and winter. Okay, so in Japan, um, you are allowed to openly drink alcohol in public. So that's why in a lot of conveniences you'll find beer, whiskey, soju, um, strong zero, those type of drinks, and you can drink them out in public. So a kind of like recent IG trend is that people will take these cups of ice, and there's a healthy version and an unhealthy version. The healthy version is you take these cups of ice and then you buy like a smoothie pack. So it's literally frozen fruit in a cup. You put in a blender, it blends it for you after you buy it, and then you pour the smoothie into that ice thing, and it makes a strawberry like a fruit smoothie for you. Another the unhealthy version is essentially you can make your own cocktail essentially. So you just buy whatever alcohol you want. You can buy some juice from the convenience. So and then you mix them in and make your own cocktail. I think this is also popular in Korea as well, where you can buy like these fruity grapes, artificial grapes, and you put them like grape and put it into the thing, and you pour whatever soju or whatever, and it's like this very interesting fruity drink that you can make. But that has been like a trend. So I mean, it doesn't cost a lot to make ice. Let's put it that way. The main cost for these ice things is essentially you need to maintain refrigeration during transportation. So these are refrigerated um, trucks, let's call them. And so the cost in the ice is not in the actual cost of the ice, it's in the transportation cost. So this could do well. And jelly underperformed a little bit. Let's see. Strengthen in-store promotions leveraging the limited edition Wind Jelly. Wind Jelly products ahead of the entrance exam season, but this could not cover the high hurdle set by the significant growth of energy glucose boost in the previous year. Significant growth. Oh, so they're saying that they had a really high growth last year, so that's led to a dip this year, is what they're saying. So who knows? Oh, how big is that energy? It's their third biggest basis, making up 1/6. Sorry, yeah, 1/6, roughly 1/6 of their revenues. I would have liked to see Angeli be outperforming here. Direct marketing. What does that mean? The health food market in direct marketing. Direct marketing. What does that mean? Morning shipment value Kinshoku Suhan. Isutsu furniture on health food sold on the internet. Also survey. Oh, direct marketing as in these are targeted advertisements, so they're kind of selling direct to consumer in a sense. I think that's what they mean. Or they're selling flyers. So this is collagen drinks, so they're probably targeting women that care about their skin. So that's probably what that is. Aijuru. I don't know what Aijuru is, but it's gone up 121%. Gone up 140% initially and went down to below, which is interesting. Market is stagnant. New customer acquisition was sluggish in Q4 as consumers became more conscious of the need to economize. So I think they're becoming more frugal. There were temporary cancellations following the February announcement of price revisions in April 2025. Okay, so they're not able to pass over the cost of higher COGS over to the customer, is what that says. High chew in the US dropped, but the market went up 5%. Convenience stores account for the high proportion of high chew sales. I believe that. The proportion also underperformed the market in January to March. Soy market of cocoa-related products and for dairy products, future impact is uncertain. Impact on U.S. business, product supply, tariff, imported raw materials, market price. I wonder if they have their own factory in the U.S. Incorporating the results forecast due to difficulty in making a reasonable calculation at this time. Right. So U.S. tariffs. Consumption trends, changes in consumer sentiment due to rising prices, and future uncertainty, heightened focus on personal financial security. Right. Significant uncertainty in the external environment. So they have a medium-term plan, so I don't have 2030 business plan. They have, what is this, 2024 medium-term management plan, and what is the other one? 2030 business plan. So their forecast is that sales increase by 5%. Oh, gross profit increase 7%. Operating income unchanged. So that's interesting. So COGS gets better, but operationally gets more expensive somehow. Could be increase in labor costs, maybe, or transportation costs because of oil. So raw materials dropping. Logistics costs, depreciation, advertising costs, other. What is an other? I don't know what other is. Product price increases, they're going to continue to increase prices, increase in net sales, so natural organic growth, US business going up. Still roughly the same. So the thing is, I don't know. Yes, they should increase prices, but then I don't know about depending on price increases as a strategy. But 6.77. So 21. Oh, operating income. Increase 6.77 operating income. Price increase. Okay. Okay, expect net sales to increase in main business in Japan and overseas, and profit to increase, driven by 4 businesses in the focus domains. It looks like confectionery, their biggest business, is the one that seems like it has the highest competition, given how little the operating income increases. Frozen desserts gonna do well. They have some good superior business economics here, or some certain amount of operating leverage. Sure, this is good too. Direct marketing, interesting. Revenues increase 1%, but they're so probably some level of COGS here that led to this. Interesting that. Oh, but then again, the business margin is really low still. Went up 38%. So there could be some future growth in this segment down the road. Damn, the China business is terrible. Why would margins drop to 4.5%? Basically zero. Damn. Why even run this business then? Right? Like, why even sell to Chinese business? I guess maintain market share, I guess. Interesting. Building a new foundation. Establishing trajectory for dramatic growth. Okay. How are they going to achieve dramatic growth? Target for 2026 is 246 million, margin of 10%. That has not been achieved. Focus domain sales ratio. Higher ROE, that's good. Higher ROIC, that's also good. Interesting. The only thing I was lacking is margins, which is kind of out of control. um, given we are in a state of war right now. So, okay. They're actually struggling in their frozen. They thought their margins would be higher than this. That's actually lower. They want 12% or higher. In business is doing well. Direct marketing doing very well. US business doing very well. Actionary, yes, this one has decreased due to reduction of non-current assets, control of renewable investments, depreciation. Due to acquisition of non-current assets. I can factor in US under control. Okay, cool. Capital reduction in product inventory via inventory control. That's good. Increase due to increase in working capital. Focus domain. Based on the issues related to jelly identified in the previous period, implement marketing measures and work on expanding sales, especially of energy group. Establish demand for entrance exams and study. Led to significant increase in sales. So in the West, we advertise energy drinks when you do extreme sports like mountain biking, BMX, skateboarding, right? But in Japan, they advertise to students because they need the energy to study. That's funny. Sports scene during the peak summer season could not capture anticipated demand. Okay, so for surfing, no skateboarding. Skateboarding is popular in Japan now. Target appeal to everyday lifestyle scenarios during the peak summer season, aim to capture light users, enhance and establish lineup of products for each target customer. Demand in summer. Cultivate full of fruit targeting women. Or the World Athletics Championship. I think they need to adopt a more Red Bull Monster Energy drink approach and actually sponsor some events. I think that would help them a lot, probably. Protein bar. No clue what this drink is. Product lines second to Jumbo are contributing to business growth, leading to continued growth that outperforms the market. Jumbo Group. Looks like they're doing advertising to appeal to tourists. They advertise on quality. I don't know how much quality you can really have in these type of products, but sure. You said they have better vanilla. So there's more ice boxes in store now. Store stocking ratio is higher. So that's probably a KPI. Store stocking ratio. This one's interesting. Direct marketing. They're gradually growing. Work on improving profitability and expanding the customer base, especially for Morinaga collagen drink, with the aim of achieving sustained business growth. So they're targeting women in their 40s and 50s because like your skin starts to lose collagen, so you kind of supplement collagen to ensure that your face doesn't sag or whatever. Yeah, these are definitely subscription businesses. So yeah, you buy on a monthly basis or you buy it on a 1 year basis, and they're targeting women that want to feel young or be young or want to like revitalize their skin. Luxury items at direct stores. Interesting. So they're doing another factory. So I think this is going to be a much larger growth engine for the company. Because that means they have some like potential supply constraints. Uh, Probably higher demand for them to consider opening a second factory. CVS is a big buyer of their products. They're doing a rebranding, redesigning their products. Sweet and snacks. Oh, I wonder if Chargel is like their in jelly, but targeted towards caffeine-free plant-based athletic gel drink designed for quick digestible energy before or during workouts. Energy without caffeine. Oh, it provides sustained energy without the caffeine crash, suitable for athletes, families, and on-the-go individuals. The pouches are lightweight, portable, and resealable, and easy to take on runs or hikes. Described as jelly-like or watery jello, gluten-free, non-GMO, and free of major allergens. Available online, retail, sold at select retailers like Smart and Final. How's up? What are they? Interesting. I do know that marathon runners have some type of energy jelly thing that they intake for like cross country or long runs, um, because it doesn't upset their stomach and they don't want to take trips to the bathroom when they're like on these runs. So what is in them to give them? What in them gives them the energy? Pack of six is $21. It's $3.50 roughly. $5. That's kind of expensive. $5. They're good doing online advertisement with influencers. That's pretty good. Yes, how does it work? Provides easy to consume calories from a blend of carbohydrates that deliver instant energy. Charged gel is also packed with vitamin B complex, which helps convert those carbs into fuel you need. Interesting. Interesting. Yeah, so this is a US base in jelly, basically. Which is good, actually. Yeah. Yeah, I was surprised their high chew takes up so much sales overseas. Pretty impressive. They call it implemented price revisions. That means they raise prices. Yeah, yeah. They didn't implement it downwards, for sure. So UK and France. Interesting. Oh, I think it will almost double in 5 years. Basically double in 5 years, yeah. More than double. Okay, they have negotiations with distributors. That's good. I feel like this company does have the potential to expand overseas. Deep candy technology, soft candy technology, creating a variety of new textures using sugar crystal control technology. I've never actually tasted anything similar to Haichu. It's very unique. Ice crystal control technology. Gel technology too. This looks like fluff. Okay, raising debt on equity ratio. Buyback shares flexibility. Didn't say they were going to buy back shares. Debt. Wonder how if they've grown through acquisition and all. Like I feel like they could buy companies too. Aim to have holdings. Okay, so they're gonna sell their investments. Okay, they're gonna cancel. Share buyback acquisition 4.7 million shares. Interesting. Okay, so they are buying back shares, so that is good. Reduce. Good. So they raised their dividend to 4.2% now. That ratio has stayed pretty consistent. Share buybacks, amount of dividends per share. 10 billion. 10 billion on a company with a market cap of 222. So that's like around 4%. Yeah. 4% yield if we combine both of them roughly. Oh yeah, for the direct marketing cost of advertising. I've done well in chocolate, done okay in frozen. No, I've not done well in jelly drinks. I've not done well in sugar and confectionery and biscuits. Okay, increasing ROIC, that's good. What kind of capex? The free cash flow is going down. Yeah, free cash flow rather volatile. Were there any major capex in the recent years? Okay, so that's 2024. Let me get some water and be right back. What's the time on this thing right now? 59. Okay, 60. Exactly 1 hour. Okay, 5 minutes, get some water. And I'll be right back. Oh, right when I say I'm gonna be right back, there's someone that joined me. Hello, what's up? How's it going? I will stay for a bit since it's rare to have someone join me in the chat. How are you doing? Where are you from? How did you find me? Did you find me on X or did you find me on YouTube or Substack? Where are you from, Pure Mac? Okay, thank you, thank you. I'll be right back. Really quick. All right, I am back. I am back. Oh, nice. Yeah, you're a YouTube recommendation. That is rarer than you think. Um, so welcome. You must be a new user. And since you're a new user, I'm going to quickly just give you an overview of what you're looking at. So essentially, I have a Substack. So a short plug, real quick plug, be a minute. I have a Substack called Continuous Compounding. I basically write a lot about undervalued stocks. Recently, because I have huge bias towards Japanese stocks because I just see a lot of value there. So if you invest in Japan, this is the channel for you. You can also find me on X. This is where I drop a lot of my updates. When I tell people when I'm going to do my live stream, that will be here. So make sure to like and subscribe to my YouTube channel if you haven't. Also, if you want, you can follow me on X if you use that, or follow me on Substack. So yeah, welcome. Appreciate it. What type of do you do your own investing? What type of investing do you do? Pure Mac. Let's call you Mac for now. I think it's easier to say. Let me give you a short overview because you just joined me. Give you a quick overview of exactly what I saw in the fiscal year 2024 for Morinaga. So essentially, the company is a consistent grower. They are very well diversified. They have a lot of different product groups, but the one thing that is consistent among them is they deal with goods that are sweets. That's kind of like how they started, and now they're branching off into other things such as energy jellies and also like health products, quote unquote health products like collagen. Like direct marketing is for collagen products targeted towards like older, middle age, or above ladies that want to maintain the vibrancy in their skin. For this company, I see a couple of opportunities. One is that they're still growing. They're still using quite a bit of debt to finance their growth. They're expanding their production capacity in the US, which is a good sign for me, which means that there is demand for the product in the US, and there's probably more room for them to grow and expand different types of product categories within the US. What I'd like to see from any company, any Japanese company, is that when a company is in Japan, their valuation is crap. But once the company starts increasing the proportion of US sales and profitability from US operations, then the company re-rates to some type of hybrid level between their Japanese valuation and a US operation. So what do I mean by that? So essentially, if we look at, I don't know, what is Monster Energy stock? They're trading at 45 times PE. I don't even know if that's fair or not. Like what type of growth are we looking at here? But yeah, consistent growth, Monster Energy drink. But that's one example, and then there's Red Bull, and then let's think about this company's trading at 12 times PE, right? But if they're able to do something, with their energy jellies, right? Their energy jellies, and they were able to, let's say this business generates 31 billion. If the US business, some proportion of this is jelly, right? So, and it's the profit margins of their jelly in the US is really high, is 15%, right? So if they're able to penetrate the US market with this energy jelly thing, that runners use and athletes use, then there could be an argument for them to have a much higher multiple for this business. So yeah, and it looks like they have good growth in their overseas business, like 12% growth here. China is really crap. China is low margin, so I think a lot of the focus that I tend to see for Japanese companies, they don't do too well in China, but they do quite well in the US. And they do well in the US because the US does not have their own. They have their own manufacturing, but even the US manufactures from outside the US primarily for something like sweets. So Japanese companies, especially in this category, are able to better compete in the US market because they have this they don't have this level of competition. If they were to compete in the Chinese market where a lot of the manufacturing is, and you're competing against knockoff brands or just Chinese brands that also make sweets, there's definitely Chinese brands that make sweet confectionery products, and they make it at such a low cost. You're paying a price premium for a Japanese brand in China versus in the US, you're competing with Skittles, right? You're competing with all these brands, and if you think about it, you see the same couple of brands at Walmart, CVS, those type of places, right? So it's these are products, and I think the margins they have in the US is even higher, right? So yeah, the only downside is the tariff situation. The tariff is what evens the playing field a little bit. So yeah, but it looks like this company is able to grow domestically, and also but domestic is through price adjust revisions, they call it, but basically price increases. So that's not the greatest strategy, but I think the opportunity set for this company right now is growing outside of Japan in the US. And it looks like their rationale for their projections in 2030 for the company and what they're able to do is quite optimistic if we think about it, right? So their in business is going to grow to 50 billion. Let's go to in the US business. Yeah, this business is going to basically double in 5 years. So if it can double in 5 years, that's pretty impressive if they can do that. Yeah. So yeah, based on these multiple, like, given their good business economics and their long-term track record, I think that this business is going to do well. And the thing is, if the US, as US becomes a higher proportion of sales while maintaining that level of profitability or even higher profitability, when what ends up happening is the consolidated EBIT margin will go up over time as you have more US sales, essentially, which would allow this to even re-rate at a higher PE or a higher EBIT. Yeah. Yeah, and they have told shareholders that they are going to be buying back shares, reduce cross-shareholding. So this is all very positive for the stock. So I wouldn't say this is like super undervalued, but this is like directionally, it feels like it's going to go up. Yeah. No. Probably just a solid stock though, honestly. Yeah, what's my rating of the stock? Rating, I would give this B plus A minus. I'd probably give this an A minus. Like if it was even cheaper, it would be even worth higher, right? Yeah. If this was a 10 times PE or like 7 times EBIT, 8 times EBIT, then this would go up to like 8, essentially. Yeah. All right, let's take a look at the most recent quarter. So higher costs they've been experiencing. Okay, not bad. I think they projected operating income would be like flat, up 1%, so slightly better than flat. So Q2 was not good. Okay, so their price revision more than offset all the increase in raw materials, logistics, and everything. Yeah, so essentially they note that yes, increases in raw materials, energy costs. But they were able to increase prices in several categories for their products. Wow. So their confectionery went up actually a lot in terms of operating income. That's because I remember last year, the last year was like around 4 or 5%, right? Frozen desserts. Yes, this one dropped a little. Their energy jelly dropped a little. Direct marketing increase. That's cool. This one increased as well. Nice. Operating margin increased quite a lot actually. Oh, the U.S. business did not do well. This could be because of tariffs. Okay, 2 and 3. It includes some resulting from exports from China and Taiwan to the U.S. business. Their year-on-year net sales on a local currency basis is 94%. 94%. But there's some negative currency impact here as well. Hmm. Income resulting from exports from China and Taiwan to the U.S. business. If it was imported from the China, then there would be tariff. There definitely would be tariff impacts for sure. China became positive. It was actually like I think close to break even or zero previously, so that's good. But the sales were lower. Remember it being 9. Oh, but this is 3 quarters, so never mind. But it's good that it's. I would have liked to see US being higher though. Yeah, it's not good. The overall margins have increased, which is good, and that's thanks to price increases. Price increases and yeah, tariffs, impact of selling expenses, raw materials, and tariffs. So major impact there. Yeah, major impact. Revenue has gone up, but Haichu has gone down. Biscuits has been flat again. The Dar's chocolate has done well. Their Carre chocolate, I think, is a more premium chocolate. Limited time products struggled. Another thing about Japan is that they will gift chocolates during Valentine's Day. In I think in high school or even elementary. It's an interesting culture. I think girls will give chocolate to guys that they like. Yeah. So they do have limited edition like Valentine's Day or Sakura, like or Spring Break. Sakura flavored chocolate. At least Kit Kat does that. I don't know if this company would do that. Okay, so their original product Choco is done well, and their vanilla is done worse than last year. So the inverse. Last year was vanilla did well, but then Choco didn't do well. Okay, their ice cream and ice box have done well. Oh, jelly dropped a lot. Difference in influenza epidemic periods? What does that even mean? And decrease the number of infected people affected jelly during consumption. I mean, I guess. I think yeah, they want you to eat plain stuff, right? When you had COVID or whatever. I'm not really sure. Do people drink energy jelly when they're sick though? I feel like Chinese people would eat kanji. I don't know what Japanese people do. They still eat rice, right? Still eat plainly, but I don't think they eat jelly. I think this is still like. I think the main use case is if you're on the go and you would buy the jelly, right? I think if you're sick at home, I don't think you really intake this. I don't know if that argument is valid or not. Oh no, collagen drink drop a lot. Struggling to increase the number of subscription customers. Continuation rate for customers acquired in the first half was below expectations. So they're struggling to compete with like the big names for candy. So it seems like in addition to price, COGS going up, also the amount of net sales has also declined. Um, and it seems like in certain instances, price increases have not been able to counteract those things. Hmm. Okay, so this is counter to my thesis. This is actually less good now, compared to my original thesis on the company. Which was they can go overseas, but it seems like the performance in the first 3 months have not been that great. What is Morinaga again? Two two here. What are these financials about? The fiscal year should be coming out. I think the fiscal year is probably going to be worse because you have the backdrop of the U.S. war, right? So COGS, probably logistic costs went up for sure. It won't be as high as before. 10 years. So, and 10 years wise, it has been kind of stagnant price. 1 year. 2300 to 2000 plus 20%. Let's take a look at what their enterprise value is. Okay, so they previously had growth multiples. And the market became more wary over until here. It'll stay the same. So basically it re-rated, but it stayed the same, roughly in the same range. So essentially it's lower expectations. High expectations or low expectations, which is why it's flat, essentially. So the company has gotten more solid. It's just that the market had a higher expectation of where they could be, and as they weren't able to continue the growth into the future, essentially. And then lowest point around 1,000. And really high expectations somehow, and then 2020, 23, 1600s, 1500, 5-year holding period, 1500 went up around 1,000, 60%. Okay, this becomes a B plus for me now. So I think this is a timing thing. So I think this is a timing investment. The German market is underestimating the growth potential in the overseas market. I think the valuation of this company really hinders on the overseas market. Yeah, or else they're just going to keep accumulating cash, and we understand that anytime a company in Japan just accumulates cash and doesn't have ways to allocate that cash, performance becomes pretty bad. That doesn't become great. Let's call it. Yeah, it isn't great. Oh, I guess if you buy in 2015. 2014. Yeah, I don't have that valuation though. Don't have that valuation. We'll go back to 15. I have to upgrade for that. What was the price in 2015? I guess it was rising to 800. Yeah. Suddenly there's growth. I wonder if they did any acquisitions actually. Let me take a look at that. If they did acquisitions, I guess at the current stage, that would be good too. Look at some, yes, Gemini. Oh, they bought in 2026. They bought the largest mochi ice cream manufacturer in the U.S. And then in 2023, they acquired Turtle Island Foods, which is a plant-based protein company. Interesting. Mm, not a lot of acquisitions. I think this is just growth. But there's probably some transitionary thing. Yes. So in 2014, 2015, Morinaga secured distribution at Costco, Target, and Walmart by major U.S. retailers, which led to a significant increase in sales. That's why. 2015, they opened their first U.S. factory in North Carolina. Yeah, they had much higher margins in the U.S. than in Japan. They cut lower margin businesses and product lines and focused on businesses products that had a higher margin. Very cool. Okay, so increase in margin, increase in sales, and increase in profitability. So three things led to the rise of the stock. Interesting. Hmm. Yeah, if they can do this, this is very impressive. This would be very impressive. Okay. Okay, so as a summary, what do I think? Okay, so yes, as a summary, so the company is being a very solidly performing stock. I think what happened was simply like the period where they had kind of stagnation was because the market had really high hopes for the company in the US, given them being able to break into major US retailers like Costco, Target, and Walmart. Um, and then because of the high hopes, they kind of like this doesn't have to be the management. It could literally be the shareholders over speculating. Let's call it right. So leading the price to soar to unreachable grounds where execution is very difficult. And but it seems like the company has been consistently growing. They've been consistently growing, been consistently improving their margins. Right. So they used to have 4%. Now it's like close to 10%, and still it remains the growth driver for this company is yes, continue to execute well in their domestic operations and using domestic operations to fund their U.S. expansion. And if the U.S. expansion does well, they're able to execute well there and continue to grow there. Beyond just the Haichu, I think Haichu is yes, is a good product. I've had that product since I was like in elementary. So it's how do they penetrate the U.S. market with additional products that they have and expanding beyond just Asian supermarkets, but the U.S. retailer. If we believe that the more widespread adoption of anime and Japanese culture will impact this in a positive way and create a tailwind, then yeah, this is a good business. Other things that I like is that they are consistently improving their dividend, performing buybacks. So you're getting around like a 4% yield on dividend and buyback as a shareholder. So your money, so that cash just doesn't build up on the balance sheet. And we are in a state where like COGS is higher. There's U.S. tariff, type of volatility there, uncertainty there, and yes, there's a war right now, so oil prices. So COGS probably drops, I would imagine. Yeah, so you could say like short term potentially this business doesn't do well, but long term I think it's going to be a solid performer. I don't think that this is wildly underpriced. It might be like somewhere around 20% discounted than what it should be valued, but I don't think it's too undervalued. But it's likely to be like a solid performer. So because of those reasons, I would think Morinaga, despite them having really long, legacy brands that are, deeply rooted in the mind of the Japanese consumer, I think that this is not like a super home run, but it's going to be consistent compounder. I would think. I don't think you can do poorly with the stock, but it's not like a home run either. So yeah, and I would also need to read the medium term plan, because they did mention in the fiscal year that their goal is to, basically double U.S. Sales by 2030, right? So what is the EBIT margin that they're able to attain in that type of scenario in 2030? That would be interesting, right? What is their revenue in 2030, and then try to do extra work on this. Additional work, yeah, is read their 2030 business plan. Right, that would be what would be necessary to get that additional insight. But I think this is good enough for now, based off of what we have covered for this company. So yeah, remember to like and subscribe and follow me on X. And yeah, I always post these results in my Substack for you guys to follow later. Thanks for that. Peace out. And oh yeah, another thing is I will be going over another two stocks. One is Ichikin 1847, and after that 8135Z. So I'll look forward to those later on, today or tomorrow.